Well, welcome back, everybody. I'm John Muschalek with Hilltop Securities, and I'm here with Tom Kozlik, Managing Director and Head of Public Policy and Municipal Strategy for Hilltop Securities. Happy New Year.
Happy New Year.
Here we are, back for episode number 22 of the Muni Minute. How about that? Hey, look, there's a lot going on as we kick off the year, right? You know, we've got a Fed meeting coming up next week, and we have been following along all the markets, all the data points, all the things coming out of Washington with the president, and you're looking for some direction here, right? That's right. In your recent commentary, you had written that municipals entered 2026 with more strength than you expected.
Yeah.
So looking at that, as we approach the Fed meeting, what signals are you watching most closely, and what does the early strength tell you about how investors are positioning and what comes next?
Well, first, Happy New Year.
Thank you.
Great to be back.
Right.
What I would describe from a big picture perspective of what's happening, 2025 was a long year, right? I mean, that's a nice way to put it. 25 was a long year. I'd say that investors went from bracing in 2025, and when I say bracing, they're trying to maneuver through the tariff. They're trying to maneuver and figure out is the immigration policy, what are the impacts that this stuff's going to have on their investments. To start 2026, I think investors are now in a building mode. They've gone from bracing to building, and I think that one of the things that's happened over the last 2 weeks, the 2 weeks to start January, is that we saw municipal yields fall about 10 basis points below the range that we saw them in October, November, and December, which is a big deal. We've been watching that very, very closely. So that's an important, you asked about signs,
right?
That's an important sign.
Okay.
The fact that they fell, now they did come up a little bit this past week, mostly because of some of this uncertainty that you were talking about. The president's talking about Greenland, potential tariff policy. So yields have come up a little bit, but they're still below that range that we saw in October, November, December. I can't say that yields are going to be that much higher. They'll be a little jagged.
Right.
But I think what this is telling us is this is a sign that yields are, the Fed is not likely to lower rates, their target rate at the end of January, but what this is telling us is that rates, number one, rates are going down, but then also there was a supply-demand dynamic in municipals in January that made yields come down more as much as they did.
Okay, so you've also pointed out that money has started moving back into municipal.
It has, yes.
As some of these yields slipped again, right? Which feels notable given how cautious investors have been. What's driving that renewed interest right now? And how should investors think about municipals as we move through this Fed decision and beyond?
So there are two things I think that are driving the really strong fund flows that we've seen. We've seen over $3 billion flow into municipal funds over the last 2 weeks, which are really big numbers.
Right.
And I'm not expecting that to weaken all that much. I'm expecting that demand is going to continue. What's driving that demand, number one, is the expectation that yields are going to go lower. I think that there are folks who, for the last couple of years, they felt as though they were doing very, very well in their cash or cash equivalents. Right. So I think that there are folks who are going to be rushing to fix some of those investment out. The second thing is I think that, and this is not as big of a thing as the first, but it's still important, it's that uncertainty. You know, there is some uncertainty with regard to what's happening on the political side, but also the equity market's doing very, very well. There's uncertainty there as well.
Sure. So, I mean, I feel like we've been saying this for a while, but if we go back 6 or 9 months, we keep saying this is an opportunity to lock in some of these yields. Sounds like that's certainly the case as we move into the first Fed decision of 2026.
And it's a big deal that those yields have fallen below that range that we saw over the last 3 months. Again, that is, I'm reiterating the fact that yields are going lower.
There's an opportunity.
That's right.
The time is now. All right, well, that's all for today. Happy New Year to everybody, and we look forward to seeing you again here on the Muni Minute.